For decades, Toronto's real estate market has been untouchable, a fortress of ever-rising prices, bidding wars that ended in tears, and ordinary families priced out of their own city. But something is shifting. The cracks are appearing. In neighborhoods where million-dollar homes once sold in hours, for sale signs now linger like ghosts. The question isn't whether the market is cooling anymore. It's whether we're standing at the edge of something far more dramatic, a collapse that could reshape the entire Canadian economy. The signs are everywhere if you know where to look. Interest rates that have climbed to heights not seen in decades, immigration policies under scrutiny, construction cranes falling silent across the skyline, and beneath it all, a growing sense that the rules have changed. That the unstoppable force of Toronto real estate has finally met an immovable object. What happens next could determine the financial future of millions of Canadians, and 2025 might be the year everything comes crashing down. But before we uncover what's really happening behind Toronto's closed doors, make sure you're subscribed and hit that notification bell. This story is unfolding fast, and you won't want to miss what comes next. Drop a like if you're ready to see the truth about Canada's housing crisis. Behind the glittering skyline of Canada's largest city, a seismic shift is tearing through the foundation of Toronto's real estate market. In 2024, Canada's population grew by 1.3 million people, but this growth is projected to slow dramatically in 2025 and 2026. This isn't just a slowdown. It's a reversal that Canada has never experienced before. The government projects that the Canadian population will decline by 0.2% in both 2025 and 2026, the first annual population decline in the nation's modern history. The federal government didn't stumble into this decision. They engineered it. Data shows a 59.7% decrease in new student arrivals and a 48.6% decrease in new worker arrivals from January through August 2025. For a city that built its real estate empire on the backs of newcomers, this is nothing short of catastrophic. These aren't just statistics on a government report. These are the students who rented basement apartments, the workers who filled condo towers, the families who drove demand in Toronto's suburbs. And now, they're disappearing. The plan assumes that 2.8 million temporary residents will leave the country over the next 3 years, equivalent to 93% of the current temporary resident population. Nearly every temporary resident who helped prop up Toronto's rental market is being systematically removed from the equation. The rental market felt it first. Reduced immigration has moderated demand for purpose-built rentals, with rent growth estimated to average 2 percentage points lower than it would have been. In a city where landlords became accustomed to annual rent increases that outpaced inflation, this is the sound of the music stopping. Average condo rents peaked at just under $3,000 in August 2023, but have since declined by 8%, falling to $2,761 by the end of 2024. But rent declines are just the warning tremor. The real earthquake is building beneath the sales market, and what's coming next will shake Toronto to its core. Walk through any Toronto condo tower, and you'll find a common thread: investors. For years, they poured money into pre-construction projects, betting on a market that only knew one direction: up. They were promised appreciation, steady rental income, and a golden ticket to wealth. Instead, they're staring into an abyss. The average asking price per square foot for new unsold condos fell to $1,524 in Q4 2024, representing a 10% decline from the 3-year peak of $1,689 reached in Q3 2022. This isn't a correction. This is a collapse in slow motion. The math that once made investing irresistible has turned toxic. Picture an investor who bought an $800,000 condo in 2020 with a 2% mortgage rate. Their monthly payment was $2,710. Now in 2025, with rates at 4.5%, their new mortgage payment is $3,569, an increase of $859 per month. But here's the cruel twist. While their costs exploded, rent control meant they could only increase rent by 0% in 2021, 1.2% in 2022, and 2.5% in both 2023 and 2024. The numbers don't just fail to add up. They bleed money every single month. Add in property taxes that have surged by 19% since 2020, with another 6.9% increase proposed for 2025, and you have investors trapped in properties that are draining their wealth. A record number of units flooded the market as investors, frustrated by 4 consecutive years of stagnant prices, sought to offload their holdings. They're not selling because they want to. They're selling because they have no choice. The promise of passive income has become an active nightmare. Benchmark prices fell 4% in annual average terms in 2024, and sales hit their lowest level since the global financial crisis. Every month they hold on, they lose more money. Every month they try to sell, they compete with thousands of other desperate investors, flooding the same drowning market. The exodus has begun, and it's accelerating. The question isn't whether more investors will abandon ship. It's how many properties will be dumped onto the market before the panic reaches its peak. Imagine signing a contract 4 years ago, putting down tens of thousands of dollars, and dreaming of your future home or investment property. Now imagine that day finally arrives, the day you have to close. Except the property you're supposed to buy is worth less than you agreed to pay. Much less. Welcome to Toronto's completion crisis. Many condos set to be completed in 2025 were purchased by investors, meaning a significant number will likely be listed for rent upon completion in a market contending with both elevated inventory levels and reduced demand. The scale of this crisis is staggering. Over 20,000 condo units completed in 2024 alone, pouring into a market that had already lost its appetite. Typically, when a property's value declines below its purchase price, buyers must increase their down payment to cover the shortfall. But what happens when thousands of buyers face this impossible choice at once? In 2024, banks deployed blanket appraisals, essentially pretending properties were worth what buyers originally agreed to pay, even when market values said otherwise. It was a temporary band-aid on a hemorrhaging wound. However, this approach will be harder to justify in 2025 as the typical decline in value becomes more pronounced. Here's what the data reveals. The average asking price per square foot for new unsold condos is projected to decline 7.3% to $1,425 in the city of Toronto and 6.1% to $1,055 in the Greater Toronto Area suburbs in 2025. For someone who bought a 700 square foot condo at peak prices, that translates to tens of thousands of dollars in lost value before they even get the keys. Some will walk away from their deposits rather than close on properties underwater from day one. Others will scramble to find cash they don't have to make up the difference. A deflating bubble-like Toronto condo market spells more bad news for investors and developers. With a fundamental issue facing developers in 2025 and 2026, as investors and other condo buyers who purchased at peak prices have to close transactions in a very different market. The completion wave isn't slowing down, it's accelerating, and with every closing, another property hits a market that's already drowning in inventory. Toronto's real estate market has always been a seller's paradise. Bidding wars, bully offers, properties selling in days, sometimes hours. Those days are gone, replaced by a reality that would have been unthinkable just 3 years ago. The number of active listings has skyrocketed, reaching levels unseen in recent memory, prompting questions about whether this is a temporary surge or indicative of a new normal. The answer is becoming clearer with each passing month. This is the new reality, and it's only getting worse. The numbers tell a story of desperation. The Toronto market started 2024 with approximately 6,300 active condo listings and nearly doubled to 12,000 by year end. In contrast, 2025 began with 8,500 active listings, and projections suggest this number could reach 15,000. Think about that. 15,000 condos sitting on the market, all competing for a shrinking pool of buyers. The average property's days on the market increased to 50 days in October 2025, up from 43 in October 2024. Homes sold for 2% less than their asking price on average. In a market that once commanded premiums over asking price, sellers are now accepting discounts just to escape. The dynamics have flipped entirely. The sales to new listings ratio increased from 29% in September 2025 to 38% in October 2025, still below 40%, which indicates that the GTA is currently in a market that favors buyers. For every 10 properties that hit the market, fewer than 4 are selling. The rest? They sit and wait and watch their values erode. Home sales declined by 11%, while active listings soared by over 40%, revealing a market cooling trend with increased inventory and lower sales reflecting greater buyer caution amid economic uncertainties. Buyers aren't in a rush anymore. They've seen prices fall for months. They've watched inventory pile up. They know the leverage has shifted to their side, and they're waiting for sellers to blink first. Every week that passes, more inventory floods in. Every week, sellers get more desperate. This isn't a market correction. This is a market capitulation unfolding in real time. Toronto's real estate crisis isn't happening in isolation. It's colliding with an economic hurricane that's making everything worse. Employer demand for new workers has made a U-turn, with net job losses amounting to 40,000 positions between July and September 2025. When people lose jobs, they don't buy houses. When people fear losing jobs, they don't buy houses. The psychology of fear is spreading through Toronto faster than any virus ever could. Recent U.S. tariffs on Canadian imports are expected to heighten economic instability, with trade uncertainties weighing on market sentiment as potential buyers delay purchasing decisions, fearing job market disruptions. The mortgage stress is suffocating first-time buyers and existing homeowners alike. Despite 7 Bank of Canada rate cuts between mid-2024 and early 2025, and 2 additional cuts in September and October 2025, affordability challenges and softer job growth continue to limit demand. Even with central bank intervention, the math doesn't work for most buyers. Despite many households being eager to buy, current mortgage rates make it difficult for the average household to comfortably afford monthly payments. The gap between what people can afford and what properties cost remains a chasm too wide for most to cross. But here's what keeps economists awake at night: the construction crisis. The imbalance between condo completions and new construction starts in the GTA, may lead to job losses in the construction sector in 2025, weighing on Canada's economy. When construction slows, it creates a devastating ripple effect through the entire economy: lost jobs, reduced consumer spending, and economic contraction that makes the housing crisis even worse. The robust economy in the U.S. has kept bond yields high, and this trend will likely spill over into Canada, meaning 5-year fixed rates in the 4% range may be the lowest we see in 2025. The rate relief that many hoped would save the market isn't coming to the rescue. Toronto is caught in a perfect storm where falling prices meet rising economic anxiety, creating a self-reinforcing cycle of decline that has no clear bottom in sight. So, where does this leave Toronto? The patterns are unmistakable. The average residential sale price in the Greater Toronto housing market has decreased by 4.2% year over year across all property types in 2025, from 1,121,171 to 1,074,978. The number of sales transactions decreased by 10.7%. These aren't projections anymore. They're reality. The crash skeptics claimed would never come is here, unfolding in slow motion across one of North America's most expensive housing markets. The Greater Toronto Area's benchmark home price for October 2025 was $956,800, down 5.0% year over year and 0.4% month over month. Month after month, the erosion continues. The condo market tells the most dramatic story. TD Economics now foresees condo prices falling through the rest of 2025, such that by year's end, they will have dropped between 15 to 20% from their 2023 peak. That's not a correction. That's a generational wealth destruction event for anyone who bought near the top. Those who purchased pre-construction condos believing they were securing their financial future are instead watching their down payments evaporate. Those who stretched their finances to enter the market are now trapped in properties worth less than they owe, unable to sell without taking catastrophic losses. But the ripple effects extend far beyond individual investors. We believe politicians hope to guide the market toward a typical annual real estate cycle, with price growth of 1% to 3% annually, in line with income growth. The era of double-digit appreciation is over. The new reality is stagnation at best, continued decline at worst. The big unknown is whether sales will rebound later in 2025 or continue to slow, influenced by factors including whether rates stay high longer, if sellers refuse to adjust pricing, and ongoing economic uncertainty. What happens next depends on variables nobody can fully control: interest rates, immigration policy, economic growth, and most importantly, psychology. When fear grips a market, rational analysis goes out the window. Panic becomes contagious. And once the panic starts, it's almost impossible to stop until it burns itself out. Toronto's real estate empire isn't just cooling. It's entering a deep freeze that could last years, not months. The question isn't whether the market will recover. It's who will survive long enough to see it. The Toronto real estate market that once seemed invincible is revealing its cracks, and those cracks are widening into chasms. This isn't about fear-mongering. This is about understanding the forces reshaping one of the world's most expensive housing markets. The data doesn't lie. The trends are undeniable, and the consequences are only beginning to unfold. What are your thoughts? Are we witnessing the beginning of a full market crash, or just a necessary correction? Drop your predictions in the comments below. I read every single one. If this video opened your eyes to what's really happening in Toronto, smash that like button and subscribe for more deep dives into the economic forces shaping our world. Hit the notification bell so you don't miss our next investigation. And if you want to understand what's happening in other major Canadian markets, check out the video on your screen right now. The story is far from over, and neither are we.